Hi everyone, I'm Anthony O'Flynn. The economic crisis in Australia is gaining momentum now, and it's not going to be possible to kick the can down the road any longer. The storm is here and the crisis is upon us, and I've been studying this phenomenon for a very long time, even since Alan Greenspan was the chairman of the Federal Reserve. So this is going back a long time, and this crisis, this debt crisis, this systemic crisis has been a long time coming, and it's inevitable basically because of the fractional reserve banking system is a debt-based system and therefore is dependent upon creating debt when money itself is created. And the literal printing frenzy that's been going on now, well, it's been going on for decades. There's no more wiggle room, there's no more time. All the options have been exhausted as far as dealing with this crisis in a more softer landing, as it's referred to, and we're really seeing this now play out day by day in real time. So we really have experienced now a lot of stress with a lot of people, with the interest rate going up 50 basis points this week now to 1.85%, and there will be more interest rate rises to come this year, and it's expected that the cash rate will actually go over 3%, which historically is actually very low. Historically, depending on how you calculate it, the interest rate is usually between 7 and 9%. So with this tension and stress that people are experiencing, it shows that there is so much little wiggle room, little leftover money from people's salaries, expenses and so on to cope with these interest rate increases. And so it's expected that the rising of the interest rate will actually dampen demand and to keep up with inflation and to hopefully reduce inflation. And this is the only lever that the Reserve Bank has. And there's been a lot of criticism levelled at Philip Lowe, who's the governor of the Reserve Bank, and even the fact that we use terms in modern Australia like governor, it shows us that our consciousness has not really evolved out of this penal colony, out of this kind of colonial imperial mindset to where we are today, with debt being used as a leverage as control. It's as simple as that. And it's been criticism has been levelled at him that he should have raised the interest rates quicker and much earlier in the piece to what's happening right now by raising them a lot each month. Well, at least this year. And so you understand that this guy is actually paid, his base salary is actually $911,728. And in 2020, he earned over $1 million. He's the highest paid public servant in Australia. And this idea that you can stop inflation by raising interest rates, well, that's just intellectual speculation. If you look at like history and you look at the real world, look at the example of Japan. In 89 to 92, the stock market went down by 60%. And that was just when the interest rate was 0.85%. So this idea that you can prevent an economic crash by raising interest rates by stopping inflation, it's like Keynesian economics really, and it's all part of that whole system where you just print your way out of trouble. And this is the issue that we really have, that is the juxtaposition of this interest rate consideration, is that the official figures now of inflation are 6.1%. That's if you believe anything the government tells you. So if we have a cash rate of 1.85% and an inflation rate of 6.1%, which has been regarded by the Treasurer that will increase before it goes down, then the stopgap measure of increasing interest rates is no way near enough as to what needs to be done to actually catch up with inflation. And this is the elephant in the room, that as usual, the mainstream media is not covering this crucial issue, which I'm going to go through in this video, because it just seems to be lost in these academics, these so-called finance experts, that firstly, the interest rate is no way near where it needs to be to dampen inflation, that it needs to go much higher. And yet, these statistics are even more shocking, that 11% on people on fixed loans are going to have a 60% or more increase in repayments at a 3.1% cash rate. So inflation's at 6.1%, and at a 3.1% cash rate, 11% of people are going to have 60% or more increase in repayments. What do you think is going to happen to the Australian housing market if that occurs? That's going to cause a complete obliteration of the economy. You're going to see mortgage foreclosures, banks foreclosing on people's mortgages literally everywhere. But that's only 11%. More than 40% of people will face a 40 to 60% increase in repayments at 3.1%. And yet these facts, this information, this conversation, this viewpoint is being completely ignored by the mainstream media. And even at 3.1%, it's basically half of the current inflation rate if you are naive enough to believe anything that the government tells you. So what does that mean? Well, the Reserve Bank are already claiming that they're going to be reducing interest rates eventually, like in the medium to short term. So if that's true, then what happens to inflation? Inflation will increase. So the reason or the argument to not put up interest rates too much is because there will be an implosion of the economy. Like we'll go into a recession, definitely. And yes, there is some merit for that. There is definitely a valid argument for that the interest rates cannot go too high. So what's the alternative? The alternative is inflation. And this is where the crisis is about to unfold. And now we're starting to see in the mainstream media a much bigger conversation around inflation, and also a bigger conversation around interest rates, but not the diametrically opposed viewpoints in regard to how to solve this problem. Because the reality is that this problem, it cannot be solved. It cannot be solved. And in my view, and tell me what you think in the comments, have I got this wrong? My view is that they aren't going to lift the interest rates too high. I don't know exactly what percentage, I'm not going to give a percentage, but because that will push us into recession very quickly. And it will also mean, as you can see here, it's already going to happen, that there's going to be mass foreclosures. And people think it can't happen in Australia. This apathetic view that we have of macroeconomics, of geopolitics, of politics in general, of world affairs, that we live in la-la land, that people have taken out all these equity loans on profits that they haven't even actually realised in their house, that they've got 3 or 4 different mortgages, that they've got loans on their furniture or for their holidays, their car, everything, completely living beyond their means. And now the realisation that interest rates are on their way up, and the statistics that I gave before should be a cold shower for anyone that can understand where things are heading, because it is, at least the rhetoric that's coming out at the moment, unlikely that interest rates will go high enough to curb inflation. So what does that mean? It means we're going to have inflation. If you don't really know what inflation can do to your purchasing power, what it's doing currently around the world, go and have a look what's happening in Turkey. Go and have a look what's happening in Argentina. Study the history of Venezuela. Study the history of Zimbabwe. And you can bury your head in the sand all you like and pretend this is some kind of fear porn or something. But this is reality. And this has been one of the biggest challenges that we've had trying to get the message out of the various convergence of crises that we have around the world, and obviously I'm referring to what's happening in Australia, that people are just oblivious to what's going on because people don't have any financial education, they don't study what's happening around the world, they definitely don't study history, and you can see from the events of the so-called pandemic from 2020 is that many of the people in Australia would rather live as slaves than actually try and stand up and do something about this. Now, the housing crisis in terms of affordability is real, and there are many people who are now struggling to pay their mortgage. And by the way, approximately 1/3 in people of households in Australia are in debt with a mortgage, 1/3 rent, and 1/3 own their house outright. So you can see this is going to impact everyone, because what's going to happen, and it's already happening now, is that the interest rates from the increased interest rates for those having investment properties and so on, they just pass them on to the tenant, which means basically the pie of spending gets bigger and bigger and bigger that goes into housing. Now, the solution to this, to make housing affordable again in Australia, is actually very simple. And in fact, the Labor Party attempted this as a policy at the previous election, not the one we've just had, when Bill Shorten was the leader. And I'm not a fan of Bill Shorten or the Labor Party in any way, but they actually had a platform to abolish negative gearing. And because there's a lot of greedy people who are invested in property that just want to make money out of property, that obviously didn't appeal to them. And so there was an opportunity there, at least. And the feedback from the Australian public is, well, we still want negative gearing. So guess what? Now we have a crisis with inflation, and now interest rates are going up. There's an affordability crisis, and there's also a rental crisis. And this problem with the housing would actually be really, really easy to solve. 3 ways. 1, you get rid of negative gearing. What's that going to do? It's going to push a whole lot of resources, a whole lot of capital into innovation, into dynamism, into new industries. And actually, maybe we can start manufacturing something again here in this country. We're the only G20 country that doesn't actually manufacture cars, believe it or not. And it was either 2002 or 2003 that Holden was the #1 selling badge in all of Australia, just 20 years ago. So if we get rid of negative gearing, that would be one thing. And the second thing would be just to ban foreign ownership. At the last census, it was revealed that there's over 1 million properties in this country that are just empty. How? Who owns those? I don't have the answer to that. But 1 million are empty. And then the third platform for this would be to limit the number of properties that you can own. Simple as that. Now, some very egotistical people would say, hey, you're going to crash the housing market by doing that. Exactly. And that's what future generations would actually appreciate, that there was at least one generation of people, or enough political will in this country to change something for the greater good, not in this socialistic, communistic agenda that's been unrolled in this country, but actually do something real to help the people of Australia. But it won't happen, I don't think, not in the short term, not unless there's a radical shift in the Australian culture to actually get engaged in the political process and start to look for systemic restructuring of the housing market. Even the issue of usury itself, that the interest payments, all these sorts of things, to change, and to change the culture of debt, to not live beyond our means, taking housing out of the equation, all these sorts of things, greater education and financial literacy. But guess who benefits the most from all of these things, with raising interest rates, with everybody being in debt? It's not rocket science, it's the banks. And so the banks, therefore, are the ones that are profiting this no matter what happens. They profit by people being in debt. It doesn't really matter what kind of debt, it's the system of usury itself. It's the fact that you are basically paying off your home, your mortgage, with money that's been printed out of thin air, and in some cases can be argued doesn't even exist, it's just numbers on a screen. But how are you paying that back? You're paying that back with your labour, with your time, with your own so-called currency, and then you are paying back the banks. And it is the greatest scam in the history of the human race. The fictional fractional reserve banking system, debt-based system that simply keeps everyone in debt like a hamster running along the wheel, around the wheel their whole life. And this is really like where this crisis is now unfolding, because, coming back to my original point, this is the way I see it. You tell me if I've got this wrong. If the banks don't lift the interest rate to combat inflation significantly, like I mean that they go way over 6%, they go to 7, 8%, what do you think that's going to do to the Australian economy? It's without question. We know it's going to happen. And we're going into a recession immediately. They started lifting the interest rate 1% every month to get it up there to stop inflation. They won't do that. I don't think so. So what's the consequence? The consequence is the Australian dollar is going to be massively depreciated. The purchasing power will plummet, and inflation will remain and increase a lot. And the other factor that I haven't mentioned yet is the corporate profits. That's what's driving a lot of these increases, is the corporate profits. And many corporations in various ways, through the structure of the companies and so on, they don't pay the tax they should even be. So they're not even contributing back to the Australian economy, to the Australian people, for benefiting from these massive profits. Instead, we're having this corporate welfare where these hugest corporations get massive handouts through the so-called pandemic. And so this crisis, as the way I see it, is what will be sacrificed is not the banks, definitely not the banks, will be the actual Australian dollar itself. Now, I'm not suggesting that the dollar will hyperinflate necessarily. That's really when you've got over 50% inflation per month. If you even have that for 1 month, the currency is completely debased there. But it will remain that wages are not going up. There will be increased costs of living pressures and basically reduced purchasing power and reduced standard of living. And as I've said, there are solutions to these things. But the first thing would be to make housing more affordable, so people aren't paying these completely crazy mortgages and paying these massive 30-year mortgages to start with. I mean, if you look at the increase of what it is per annual income, now what it was 20, 30 years ago, it's actually staggering. And people are just completely in debt because of it. There is no reason, in my view, why every person in this country is not like living in a house or an apartment and is not in some kind of ridiculous debt for 25 to 30 years. We have the resources to do it. We don't have the political will, and we don't have the policies that people are even putting forward in the community, and there's not enough engagement in the political process to have a voice to start to express a need for a systemic change. Because it's a systemic crisis, this is. And not only that, this is compounded by global events, that we're basically now at the end of the American empire, which is going to have colossal effects because the US dollar is dying, the petrodollar is dying, and this is going to have global effects in the medium to short term, particularly as we go into 2023 and 2024. I mean, this crisis is going to be genuinely unprecedented, and it is going to have global ramifications of what's going to happen in the US, because their debt is, they can't pay it back mathematically, and the supply shortages are showing up now. There's all kinds of poverty, homelessness, and inflation as well is actually bigger in the US than what it is in here, Australia, at least officially. So there's a lot to think about in that video, but this is not going to be a temporary thing. This is going to define this decade, this economic crisis. And I'm going to get into the spiritual dimension of things in another video, as to help people understand what the process of this is for us to learn individually and collectively. Obviously, a lot of themes around greed, entitlement, being like this consumeristic, materialistic person, and also the general theme of living beyond our means, which has become a way of life here in Australia. And it's not something that gives me any satisfaction of joy of seeing people suffer financially, economically, But this crisis has been a long time coming, and it's now unavoidable. So this will play out with increasing attention and oxygen given to it in the mainstream media, because it's just something we can't bury our head in the sand. Let me know if you think I've got it wrong or what I've got wrong. Obviously, I'm not coming from the place of Keynesian economics, but this trade-off between the inflation rate and the interest rate, it's between a rock and a hard place. And it'll be interesting to see what the powers that be, the rhetoric that comes out of these institutions and the government and so on, when they talk about this, because I don't see a solution to this now. I see that this crisis has to be weathered, and we'll come out of it the other side, I think, much wiser, a better economic system, fairer economic system, and with a lot of embodiment of the wisdoms of the lessons that we're all going to learn from living through this. And look, in my view, it's going to be much worse than the Great Depression. It really is. And it's a much deeper systemic crisis. And it's really part of this paradigm shift to come through the other side of this and create a new paradigm. Anyway, that's all for now. Thanks for watching. Really appreciate all the comments and your engagement. I'll be back with more soon. We live in epic times.